Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 10th of December 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's take a look at the overnight changes and price moves to be aware of. And as it's a Monday, of course, we'll look at things from a weekly perspective. And what an interesting week it was. There were gains for the euro against the US dollar alongside the pound sterling. The euro up by 0.75% against the US currency. The pound sterling faring less well, but up by around 0.25% over the course of the last week. It was a different story though down under, with both the Australian and New Zealand dollars losing ground to the US counterpart. The Aussie dollar taking a knock on the chin, really, I think it's fair to say, down by around 1.85% against the greenback over the course of the last week. The New Zealand dollar shifting 0.41%. Lower as well. The yen, however, gaining against the US dollar, up by around 1.05% against the dollar over the last 7 days. There were gains for the US dollar, however, against the Canadian dollar, gains of 0.78%. That despite the Bank of Canada's recent interest rate meeting. And in terms of dollar Mexico, dollar peso, the Mexican peso was on the front foot, up by 0.52%. Presumably investors getting behind AMLO's new presidency there. And as far as dollar index was concerned, 96.42, it's trading this morning, down by around 0.64% over the course of the last week. The biggest move, though, at least as far as this day was concerned, came in dollar rand, with the rand weakening back above 14 and giving up 3.28% against the US currency over the course of the last 7 days. Okay then, what's on the calendar? Events that may move the markets today. A pretty quiet calendar, to be honest. We've already had a fair amount of the data that's on it out. So we had home loans and investment lending data from Australia for the month of October at 12:30 GMT this morning. There are a couple of central bank speeches early doors, with the MPC member Cunliffe speaking at 6:30 GMT, accompanied by the Bank of Canada Governing Council member Lane also speaking at that time. Swiss unemployment rates for November will be released at 06:45 GMT this morning, and we'll also have the current account data for Germany for October at 7 AM GMT. At 8 AM, we're scheduled to hear from the European Court of Justice and their views on Article 50. You'll remember that the Judge Advocate ruled that, or gave his opinion, I should say, that the UK could revoke Article 50 unilaterally. Hopefully the ECJ will confirm or deny that one way or the other. At 9:30 GMT, we shall have manufacturing production, industrial production and gross domestic product out of the UK for the month of October. That's probably the pick of today's economic data. At 12:45, we shall hear again from the Bank of Canada's Governing Council member Lane in their second speech of the day. And finally, staying in Canada, at 13:15, we shall have housing starts data for November. Right, breaking news then and comment that's caught my eye overnight and over the weekend. And firstly, home loans grow unexpectedly in Australia during October, up by around 2.2% versus forecasts for unchanged and a prior read of -1%. So construction data has been a bit of a bugbear for the RBA, the Reserve Bank of Australia, but that is better news, and that may encourage Aussie dollar bulls once more. The Canadian courts will decide today if Meng Wanzhou, Huawei's Chief Financial Officer, is eligible for bail. She will be applying on health grounds, if nothing else. That'll be an interesting decision to watch. But it's a tough time to be a global executive at the moment. Carlos Ghosn, the former head of Nissan Renault, has been indicted in Japan on charges of understating his earnings. That's a very interesting case to watch as well. Meanwhile, the US appears to have set a hard deadline of the 1st of March 2019 for its trade negotiations with China, and tariff rates would rise from 10% to 25% post the deadline, say the US trade officials. Okay, food for thought then, something to take away with you into the trading day and beyond, and why not think about this? Research from Bank of America Merrill Lynch shows how stock markets and their returns have differed from economic performance over time. And you can see that here on the chart on the right hand side. In the 1980s, high levels of nominal GDP in the USA had a negative effect on the US 500 index. But more recently, lower but seemingly more sustainable levels of growth have seen more positive equity returns. So here's the picture in 1980, 1981. GDP was growing at a nominal 14%. Of course, the inflation was very high, so it wasn't real GDP, it was nominal growth, and yet stock market returns were pretty poor. As you can see, they were negative, in fact, over that period. Meanwhile, in 2009 to 2018, growth has been substantially lower, but in fact, real growth has been higher, and of course, index returns from the US 500 index have been considerably higher themselves. So it's an interesting chart, lots to ponder within it. Okay, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And as I say, please do take a moment to read this risk warning thoroughly. Thank you for your time.